Hey there, savvy viewers! Welcome back to our channel, where we break down complex topics into bite-sized, understandable pieces. Today, we're tackling a headline-making subject, the state of the global economy. It's like being on a roller coaster ride, and we're here to be your economic tour guides. So grab a seat, hit that subscribe button, and let's embark on this thrilling journey of economic exploration. Let's rewind a bit and dig deeper into the economic maze we find ourselves in. Over the past year, the stock market has been a bit like a wild horse, galloping through ups and downs. Imagine a dip, down by 12.5%. Now, those might seem like just numbers, but they translate into a forward PE ratio of 14.4. But hold up, what does all this jargon mean in plain English? Well, imagine you're at a yard sale. The stock market is the big table with items for sale. The dip in the market is like seeing a shiny gadget you want, but it's 12.5% off. That's a deal, right? Now, the forward PE ratio is like checking the price tag. It's 14.4 times the earnings. Think of it as the price you're willing to pay for that gadget's value. So, in a nutshell, we've got a market that's been on a bit of a sale and people are eyeing those discounts. Now fasten your seatbelts, because our first stop on this economic roller coaster is none other than Japan. The land of the rising sun has faced its fair share of economic challenges, with a 2.1% contraction in GDP for Q3. Yikes. To put it in perspective, it's like watching your favorite team stumble in the last quarter of the game. You're on the edge of your seat, thinking, come on, we can do better. Japan, being the economic team player it is, tried to give its economy a boost with some extensive money printing. It's like trying to pump up a flat tire with enthusiasm, but the situation is far from sunshine and rainbows. The Bank of Japan, playing the role of economic mechanic, has been tinkering with bond yields, keeping them low to prop up the economy. But here's the kicker. It's like trying to fix a leaky boat with duct tape. Sure, it might keep things afloat for a bit, but it's not a sustainable solution. Picture this. The Japanese economy is the boat, and extensive money printing is the duct tape holding it together. But like any temporary fix, it's not a long-term solution. It's a bit like using band-aids on a wound that needs stitches. It might cover it up, but it won't heal properly. That's the situation Japan is facing. A temporary fix that might not weather the economic storm. So, what's the takeaway? Well, the economic landscape is intricate, and these attempts to patch things up might not be enough to sail smoothly through the challenges ahead. As we navigate through these economic waters, remember to like, subscribe, and let us know your thoughts in the comments below. We're just getting started on this economic adventure. Stay tuned. As we zoom out and take a broader look at the economic landscape, it becomes evident that trouble is brewing in the global demand arena. Despite the US GDP standing tall at 4.9%, it's like a deceptive calm before the storm. Europe has already found itself in the clutches of a recession, and the third largest global economy, Japan, is navigating in deep waters. Imagine it as a colossal game of economic dominoes. One piece falls, causing a chain reaction that threatens to topple the entire structure. Even the United States, with its seemingly robust GDP, might not emerge unscathed from the impending economic fallout. It's like sailing through unpredictable seas, never quite sure when the next wave will hit. The interconnectedness of the global economy is akin to a delicate dance, and any misstep can send ripples across continents. The economic health of one nation influences others, creating a web of dependencies. With Europe already experiencing a recession and Japan facing economic turbulence, it adds an element of uncertainty to the global economic stage. Now, let's shift our focus to you and me, the everyday consumers navigating these economic waters. It appears that people are tightening their belts, adjusting to the shifting tides of economic uncertainty. Consumer spending, the heartbeat of many economies, is on a sharp decline. Picture this. You're at the grocery store, and instead of filling up your cart with the usual items, you're carefully considering every purchase. It's a conscious effort to make ends meet as the economic winds blow unpredictably. The repercussions of extensive money printing are starting to show up in our wallets, affecting the choices we make as consumers. Japan finds itself caught in a doom loop. a situation where the more they try to fix things, the more challenges arise. Their currency is dropping, which, in theory, should make their exports more attractive. However, the reality is different. The expected boost in exports isn't materializing. It's like having a well-thought-out plan, but the execution falls short of expectations. Japan's struggle highlights the complexities of the global economic web, where even seemingly logical actions don't always yield the desired results. Now, let's hone in on the intricate world of exports, where Japan finds itself grappling with unexpected challenges. Despite their best efforts, selling goods globally has become a considerable hurdle. It's like having a finely crafted product, a masterpiece ready for display, but the audience isn't as captivated as expected. Think of it as a grand opening for a new restaurant. Japan has prepared an exquisite menu, offering top-tier dishes at a discounted price, with the yen down by a significant 25%. It's a killer sale that, in theory, should attract a swarm of customers eager to savor the delights on offer. But here's the plot twist. People are still opting for the more expensive alternatives. But here's where it hits home. Household debt. It's like a game of Jenga. If one block falls, the whole thing could tumble. Right now, people are piling on debt just to make ends meet. Credit card interest rates are through the roof, and it's raising the specter of defaults. Not good for anyone. Now, let's talk about the big R word, recession. The unemployment rate is ticking up, and there's this rule that says if it's 0.5% higher than a year ago, we're officially in a recession. It's a bit like seeing storm clouds on the horizon. Switching gears to the United States, our government is in a bit of a pickle. Janet Yellen is borrowing big bucks, $776 billion in Q4 and another $16 billion in Q1 of next year. That's a hefty bill, and the debt interest alone is over $1 trillion. Ouch! But wait, there's more. The US is funding not one, but two wars, one in Ukraine and another in the Middle East. War spending is up by almost 5%, and if things escalate, it could skyrocket even more. It's like adding a whole new layer of complexity to an already tangled web. Now, let's talk about the big boss in the room, the Federal Reserve. They're in a tricky spot. Interest rates are up, and inflation is playing hard to get. It's like trying to find the right temperature for your shower. Too hot or too cold, and things get uncomfortable. In a nutshell, the economic landscape is a bit like a high-stakes game. The Federal Reserve is holding rates high, but it's putting the squeeze on consumers. And with global demand dropping, it's like we're all in this boat together, navigating stormy waters. So, what's the takeaway? Well, it's a call for strategic decision-making. We need to address the root causes, not just slap on a quick fix. The world's economies are intertwined, and it's time for a game plan. That's a wrap for today, folks. If you found this video helpful or intriguing, don't forget to hit that like button, subscribe, and ring that notification bell. Let us know your thoughts in the comments down below, and we'll catch you in the next one. Stay curious.